The federal budget is with us again on Tuesday night. Governor Lowe and the Reserve Bank are making this budget even more interesting, given what we saw with interest rates this week. So the inflation and the interest rate outlook and the implications for that from the budget will be very important. The Treasurer has a lot of money to spend. The bottom line has improved, we believe, by around $110 billion, and that includes a potential getting very close to a surplus in 22-23. The deficit is around $37 billion estimated in October. We think it'll now be about $7 billion, so very, very close. Why has the bottom line improved so much? Mainly around the higher inflation in the economy, the stronger labour market, and the assumption around the iron ore price. So back in October, they assumed the iron ore price would be $55 by March 2023. Of course, it's still at $120. Now the assumption, we think, will push that $55 out to the end of 2024. Combined with the higher inflation and the stronger labour market, we expect that will lead to that $110 billion in improved bottom line. So how should they be spending that money? Well, we expect there'll be relief for households, both with regard to rents and with regard to energy costs. There'll be relief for medical prescriptions. We expect that there will be relief, encouragement for investment, for green investment, for small business, and a range of other initiatives that will start to leak out over the next few days. On the tax front, we expect that there'll be more money raised from multinationals and likely to see a rise in taxes for gas companies. So what do we think is a reasonable amount of money to spend in terms of what would to avoid putting upward pressure on interest rates and inflation? We look back through previous budgets. New spending in the first year is around about 0.2% of GDP. That's around $6 to $7 billion in today's numbers. And over 3 years, about 0.5% of GDP, about $13 billion. I expect the numbers will be bigger on budget night, but we'll be looking at the impact on the economy and inflation through that particular lens.